We go into the next session now, success stories of value delivery, discover the differences. I'd like to call upon the panel, starting with Sriram Gopalakrishnan, Director, Global Shared Services, V Group. Sriram is a strategic leader in the field of global shared services, currently serving as the Director of Global Shared Services at the V Group, a leading provider of ship management and maritime services. Please welcome Sriram Gopalakrishnan. Joining him, Dr. S. Venkat Kumar, Principal Consultant Business Support for the APAC and ME region, Cone Elevators India. Dr. S. Venkat Kumar, associated with Cone Elevators India as a Principal Consultant, Business Support for the Asia Pacific, Middle East region. Warm welcome to you, Dr. Venkat Kumar. Hemamalini Venkataraman, Head of GBS Service Delivery, FL Smith. Hemamalini heads the Global Business Services Delivery for FL Smith from India. She has over 27 years of experience across GBS and outsourcing organizations like GE Capital International Services, Hewlett-Packard, Accenture, DXC Technologies, Rolls-Royce. She is a professional cost accountant and company secretary by qualification and is also a black belt. Welcome, Hemamalini. And the moderator for this session, Nilesh Bhatia, Senior Vice President, Head Customer Delivery and Operations, Quintus Global. So it's over to you, Nilesh, to take that session ahead.
Thank you so much, SSF team, to give us an opportunity to talk about an important topic. I think this is very close to everybody's heart: value delivery and redefining the KPIs in the current environment. And I'll just talk about it in few minutes, and then I will, of course, hand it over to the esteemed panel. Value delivery, I think, in this particular industry has been the buzzword right from the time when this industry actually started. I think way back in mid-90s when this industry was taking shape, we were all given to understand that this is something to do with transaction processing. I think today, about 30 years down the line, now the transaction processing itself is left way behind. I think we have come a long way beyond that, where now we are playing an important role of being enterprise partner in pockets. There are areas where we are doing a better job than others, but I think still there is a long way to go to be able to deliver tangible benefits to the business, which are measurable, and where the business can really call us as collaborative partners, or we can get a seat on the table. Some organizations, we have reached that level in some form or fashion. Others are just following up. But I think definitely we have some lessons to learn from our experiences. And that's what I would request our panel to talk about: how the value markers are changing, how the KPIs are being redefined to include these value markers, so that we can learn from the experiences of this esteemed panel, and we can talk more about it. I would request the audience here to feel free to ask questions and intervene, or share their own experiences about how they have done it in their organizations, so that it can be a two-way communication, two-way session, rather than just we talking about. Is that okay, panel? If you're okay with that? Fair enough. I'll then hand over. I'll start with Venkat. If you can share your knowledge and your experiences, how value delivery and value markers have changed or have been actually implemented in your organization. Over to you, please.
Thank you. Good afternoon, everybody. I think there's a small presentation which I have. The slides, this one. So as the slides are coming up, so we are talking here about value creation, and value creation does not mean just improving the top line and bottom line. Many of us think that, okay, the top line is healthy, we have added a few millions to the top line or the bottom line, then we have created value. Now, value creation is about the ease of the process. Ease of the process. How is it lean? And today we are talking about lean user experience. So it's not just lean within the organization, but from a user perspective, how is it lean? And then finally, the value to all the stakeholders. So our business associates, employees, vendors, and the customers. And what the bottom line I would say is, value creation is when it comes to an organization, how easy it is to work with the organization and work for the organization. That's the ultimate value that we see. Numbers are there. Few of the numbers are tangible, few are intangible. So let me just explain to you what we are doing over here. Obviously, you know, Kone is a global leader in the elevator and escalator industry over here, with close to about 60,000 employees globally and 500,000 customers. And what we are focusing, and I think I specifically put this slide, food for thought, because it's just before the lunch break. Yeah. And so how are we going to leverage on our process re-engineering and Gen AI for redefining some of the value markers, redefining some of the KPIs? Right. So when we talk about BPR, we are basically talking about how do we improve efficiency, how do we improve productivity and the overall performance. So that's where you look into the process in detail. So when you talk about value creation, it basically starts from doing something, taking a look at what internally you're doing and what is going to be the output. So that's where the BPR comes into play. Oh, sorry. Can we have this right, please? We need to go back to the second slide. Presentation mode? Yeah. Have to press one. No. Put it on the presentation mode? Okay. Obviously, we can't be creating value this slow. Apologies for that. In today's context, the value creation has to be much faster. So when we talk about efficiency, productivity, and overall performance, so the BPR is actually going to be focusing on defining certain KPIs. So when we talk about KPIs, we're talking about descriptive KPIs, we are talking about predictive KPIs, and also prescriptive KPIs. In fact, Mr. Sunil in the earlier session mentioned about certain hygiene KPIs. Yes, today, earlier when we used to talk about, when we started the BPO or shared services industry, we were talking about certain KPIs. Today, most of them are hygiene KPIs. Nobody talks about it. So let's decode BPR first. So the BPR, what does it involve? It involves certain steps where, you achieve business objectives. And then what does it aim to? Enhance customer satisfaction. And the key components in leveraging technology. Today, technology is changing so fast that we need to be abreast of the technology over there. Otherwise, we are going to be far behind. In fact, when you go and study some processes in certain organizations, you will feel that they're like 10, 12 years old. And then you go hire a consultant and they do something. And they just bring you to date. And which is something, you're learning from somebody who has already done this so many times. And you're far, far behind. You just get to date, but you're not getting into the next stage of technology. Now, so this is where we will try to combine the new buzzword, Gen AI and BPR. So AI can support in doing various analysis. It can do a deep dive into your data and come out with a lot of solutions and a lot of additional value adds that you know. Now, some of the KPIs, I'm driving straight to the KPIs because then we have the panel talking more about the KPIs as well. So we talk about how do the quality KPIs change? How do the system KPIs change? So there are various parameters. So earlier, these were just like hygiene factors, but we go take a step further into some of these KPIs to see what they are and what they mean. Now, like I said, some of these are clearly indicative KPIs. It is not a KPI that comes after the process is over, but a KPI even before the process is evolved, so that will tell you something what can correct. Rather than doing a course correction much beforehand. Then we talk about customer service KPIs. We talk about marketing KPIs and retail. I believe most of us in this room are from the shared services. So in one way or the other, we are touching upon the finance part of it. So on the finance part of it, let's talk about a new KPI dashboard. So earlier on the finance, when it comes to the O2C, we just used to talk about some bank reconciliation and things like that. But today there are a lot of things of the unallocated cash, activities of the auto match percentage, then the AR aging, the true e-invoicing. Similarly, on the P2P, you've got what is paid on time, e-invoicing. So e-invoicing, that's a very good indicator of your KPI, how healthy your organization is, how you're moving to your technical platforms. Then on the record to report, basically on the unreconciled balances, the errors that are coming up over there, and to what extent have you been automating your journals versus your manual journals. So these are just some indicative KPIs, and there could be many more. Also on the supply chain management, you've got KPIs like, the diversity of spend, the planned course of action taken against contracts, then the POs generated from the work platform, whether it could be SAP or it could be anything else, then the percentage of compliance and things like that. So these are some of the new age KPIs that are coming up, which could really add value to the organization, And it also depends upon the processes that you have. So when you start defining these KPIs, you'll have to first relook at your process, maybe redesign your process, and then use some of the latest automation technology to start defining your KPIs. And this you will see will ultimately lead to value enhancement and the performance management improve. So I'll pass it back to you.
Sure. No, thank you so much. Now, I think a lot of these things, the KPIs being redefined require technology. I think technological intervention, because in today's world, the volumes are really rising. And with the rising volumes or increase in volumes, managing the KPIs or even publishing the KPIs and dashboards like these would become a cumbersome job if it has to be done manually. So what role, my question to Sriram is, what role does the technology play in value markers and being able to add value to the organizations? Can you imagine today, if you do not have the technology, how can you add value to the organization, to the franchise, to the business, if the technology has to be taken off from our landscape? Any thoughts?
Pertinent question, right? So can you guys hear me? Yeah. So I think value to an organization, and I think it's covered pretty much, and it's tough talking after an entire PPT because it completes the whole story there. But I think the way I look at value, or we've looked at value at V, is a three-pronged approach, right? You got the cost, you got the standardization, the efficiency story, which is a bygone forgiven or a license to operate today in the shared service world. The second layer is enabling revenue. How can you get closer to the core business? How can you make an impact in their life? And the last, obviously, the way we look at it is ease of doing business for people internally across the organization. And focusing on that second one, which is more enabling revenue, working close to business, I think a lot of our time is spent as doers in the back office kind of operation. Okay. And I think what is starting to change is moving from a doer mindset to an owner mindset. Easier said than done. It involves understanding what is your product that you want to offer as part of the shared services. It involves having the right organizational structure, the right kind of talent. Obviously, all of this with the enablement of technology, which then starts getting you a capability which matters or means for the core organization. And then to measure it all is the kind of KPIs. Typical of all GCCs are our KPIs are somewhere to justify our existence or to ensure that we have our license to operate, which is, am I, my productivity is right, my turnaround time is right, or the kind of measures. But I think it's time now to go back to stakeholders and start understanding what really matters to you. And how can I have the same kind of measure and help move in that direction? So we've got a few areas in our business where we work closely with the parent organization or as we call it, our teams in the countries to help transform their business. I think as long as we consider ourselves purely as back offices and just this doing organization, it's not going to happen. What we've done very well over the years is great project management skills, great transition skills, great ability to understand and enable change management. Now, with these three strengths that we've got, we can go to the front office of the business and help them in their transformational journey and help change the outcome. Now, to get back to your question of, how can you do it with tech, without tech? I think as long as you've got your product design right and it then allows you to get a seat on the table, tech is more an enabler. All of this is, I'd say I'll get a better product. I need more seat on the table. I don't think they're going to give you more headcount. Okay. So, you got to do it with the same headcount kind of a conversation. And for that, tech is going to be that enabler to allow you to step up. It's not going to be, I jokingly tell my teams and people that when you go to an accountant and you ask him why you passed this particular entry, okay, the first answer he'll tell you is he'll open Outlook and he'll show you an email from a finance manager somewhere and says, see, this guy asked me to pass this entry, see, it's in the ledger. Now, that's the doer mindset. And it is there across our organizations to then step that up to start getting into a zone where, I take full control. I know what we are doing, and I will talk about that, and I will sit in those core meetings. We've got to earn our seat on that table. While as much as we talk about it, you've got to be able to sit with country MDs and have that controllership kind of conversation, have that talent, and then help that. So tech to me is a big enabler in that space, but this is not be all end all a tech journey. It is a mindset shift. You got to help that space.
Sure. No, thanks, Now, yes, technology is an enabler, and humans have to intervene to really deliver the value to the organization. Hema, I'll come back to you. There are values which are, value which that we deliver to the businesses. Sometimes with these, KPIs are very easy to measure, but lot many values that, GCCs and GBSs are adding to the business are intangibles. I've increased the compliances. I have reduced the turnaround time, or I'm increasing the controls. Had that not been there, this would have happened. How would you put a value to the intangibles? That value that, is not coming out very clearly from this dashboard. How do you value it? How have you done that and demonstrated to the business that this actually is really a lot of value that we deliver to the business? So if you can share your thoughts, please.
Question, because we're all talking about numbers which impact the customers, right? And this is about how you do this. So some things that you spoke about are risk and compliance and those kind of very, very important metrics. Audit is again a very, very important, deliverable that we have as a finance community. If we don't do these two things right, however, we have kind of done well on our KPIs, it will go for a toss if these things are not taken care of. To us, what we do is there are certain deliverables that we have as a measurement system, right? So from a compliance point of view, we do certain pre-compliance checks. to see how well we are prepared to meet some of the audit requirements. So those things are something that we discuss with our customers. This is really important for you. This is really important for the organization. We just go and speak to our FP&A team, to kind of say that, is this metric what we are actually looking at? So there are today things around compliance that we measure, and then we report it as a metric. Similarly, on the audit things, we do internal audit. And those audit observations are today given as a deliverable to the operations team, much beyond, the KPIs that they're doing in terms of turnaround time, accuracy, all the other value insights and deliverables that we have. Because again, if there is a little bit of an exposure on quality and compliance, whatever we have done goes for us. So those things are also becoming an integral part of our metrics, just not about numbers or about value delivery, but how you do it is also becoming a very, very important element.
Thank you. So Venkat, the dashboards that was shown for finance specifically, R2R is one area where, measuring of the quality and the value sometimes becomes a challenge, because, lot many things are judgmental there. They are based on the judgment that an individual takes. Entries have to book in this particular account or that account. So a lot of that judgment is now being taken over by the technology. How do you think that, we can, same question we are extending, how can we measure the intangible benefits of the R2R, the value that is delivered to the business in terms of manual tracking, or can actually be shown to the business that this is actually the value that we have delivered, and specifically in R2R?
Yeah, I think very, very relevant question. The best way to see that are we adding value is the R2R stream, adding value to the entire finance process and at the end to the organization, is to see that if today we are able to close our books, let's say 6 days, 6 working days after the month is over, are we able to do something differently to close it in 4 days, to close it in 3 days, 3 working days? I think that is a very good indicator. And how are we going to do that? The numbers are going to be the same. Okay. Yeah. Okay. So how are we going to close our books faster? How are we going to close our books faster? So it's not that we are going to rush up or hush up some figures. The process is going to be the same. But what is going to help us close the books faster is that we get all the entries streamlined and in a proper manner through an automated process into our books. So that is a very, very good indication. And as finance professionals, we are all responsible for the budgets. And I know we spend budgets, let's say if the budgets for the next financial year of 25, we start preparing from August, September. And that goes on right till the 15th of December before the budgets are signed off. But if we can automate some of the processes, if we can automate some of the Excel worksheets, get the data in a more consolidated manner, and ultimately what is presented, the data that is presented is more from a decision-making aspect, then it definitely helps. It saves a lot of time. It saves a lot of time. So depending upon how the organization is structured and what are the processes, I think we can do a lot of automation on the R2R front to see that it adds values. At the end of the day, how accurate and how soon can you close the books and publish the results? That's a very, very good indicator, I would say, as far as R2R is concerned.
Absolutely. Nilesh, as touching on R2R, I think a couple of, you touched about budgets, specific to our maritime space, we've got budgets that we give our customers for every ship that we manage. Okay. And as a GCC, there is a lot of data that we have at our disposal. Now, we run these budgets and we close our books and all of that is fine, but how can you change the value play on these budgets? Are we able to use today's machine learning capabilities or today's data analytical capabilities of comparing budgets across different types of vessels? Okay. Can I compare VLCCs with other VLCCs run by different clients and see how these budgets are different? Go back to our businesses and start seeing, why a vessel of a particular type, of a particular age category has a different line of spend vis-a-vis others, and can we do something about it? That's the kind of conversations today the core businesses are enjoying when you got all this data at your disposal, because all budgets are with you. Can we take that same data, elevate the level of conversations to go back to core, to the business, and then have meaningful, insightful conversations with that? That's the change in stake in the table. Now with Gen AI, I was looking at a kind of prototype, and he talked about relevance of clean balance sheets, risk-free balance sheets, and there is the capabilities now which is in talk of what kind of transactions are starting to risk or exposure, build the risk in your balance sheet accounts, as we all do balance sheet recs. And can AI pick all of that separately, and you deal with those rather than going through this whole reconciliation processes and stuff, which is changing the way you do balance sheet recs today, which is going to now redefine that whole space. So to your earlier question, how much of tech? Yes, tech has a big role, and it can change areas which are as intangible as R2R, because honestly, that's where you're going to impact the CFO's office. That is where he's going to turn around and say, a yay or a nay. So I think there is a lot that this whole value change or value proposition space can deliver in even areas like R2R, which are tough to quantify and take the journey.
Just to add on to Sriram, it's also the analytics part of it.
Yeah.
So the numbers are one thing, but how do you analyze those numbers? There again, the tech or the AI can do a lot of things. And then certain guidelines for course correction, guidelines for the future. So I think that is going to be a game changer. It's not that, okay, you budgeted something, you met your budget, good. But what more? What next?
Sure. I think we also did something of that sort in our organization, where, paid on time, for example, as an example, we provided that report to the CFO. He really liked that, how much actually vendors are being paid in time. One side, they had a lot of budget, they had a lot of cash flows, but there are, on the other side, vendors who are getting payment which were delayed. So that anomaly was not clear why this is happening, how that can be stopped, and things like that. We started providing some predictive analysis to the CFO, saying that these are the pockets where vendors get delayed, simply because they do not submit their invoices in time, or if they submit their invoices in time, the due date for them has actually been already passed. So the individual who gets that invoice takes time to actually get it to the person who actually processes those invoices. So we started providing those predictive analysis to the CFO, and that really added value to him, that the vendors became actually happy because they started getting payment in time. Similarly, I think we did analysis of which particular region we are collecting payments from the customers in time, and what are the businesses or the regions where we are getting the payments in not in time. So the focus started coming to those regions where the analysis showed that there is tardy collection of money from those particular. So these are the kind of values that we added to the business. Now, I think adding on to this, sometimes it happens when the customer resists, saying that the value that you are adding actually is something which is expected from you. So what is new? Why are you saying that this is something which was not expected from you? So those kind of discussions sometimes become really interesting. They have their own different view, and from our side, the GBS also says that this is something which we have done over and above what was expected from us. How do you marry those expectations to come at a platform where both feel happy and both realize that, yes, this is actually a value addition to the business? Hema, what are your thoughts in this?
Again, in our recent relationship, right, the same kind of conversation came through where, there were collections that were done, and, our partners or friends were claiming that, these are over and above what it was expected. So that was a very tough conversation to have, because, obviously this is part of your job, and then you can't be creative about this. But we got onto the table to kind of see what was a trend that we had in the past and how did we do that, right? And then this, after implementing X, Y, Z, or making that game changer, the strategies changing and things like that, then what are the things that we are seeing quite differently? So that actually became a good discussion rather than saying that, no, this is something that's expected out of you and this is something that the other side is saying this is a value addition. Every customer or partner gives that value addition as one of the, giveaway for us, right? So that discussion happened. And so it really became important for us to do that bifurcation to say that, yes, this is part of business as usual. This is something over and above that you're putting and transforming things. And they have to demonstrate the transformation to us, what they're doing differently. So that is where what and how comes into place. How they are doing it and how effectively they are doing it comes into place. And that discussion is very, very important to have at the start of defining the metric itself.
Venkat, any experience in this?
Yeah, I would say that I would look at it two ways. One is, okay, when we talk about value addition to customers, like what Hema said, okay, there's something which you're supplying and we're getting paid for that. That's fine. But what about the quality part of it? What about the safety part of it? And today we are talking about carbon neutral and all. So how is it adding to the society? How it is adding to the society? These are some of the values which we can pitch for, which we pitch for. And then the team should be winning with customers. We don't want a customer for a day. We want a customer to grow with us and we want to grow with the customer. We want that customer to refer another two customers, and that's how it has to grow. So that's the value add which we see in the relationship with the customers. So we'll have a customer and if he's not satisfied, he'll walk and he'll have some other customer. But that's not the way of doing business, right? But we have to see how do we win with the customers and how do we take it from a long-term perspective? How can we jointly contribute to the society? That should be our aim and that should be the larger focus of the business, I would say.
Yeah. So moving on, I think you talked about value creation, I think at the start. I would like to know from Sriram, value delivery is perhaps one time we can talk about that we have delivered value and done and dusted. How do we create something which is more sustainable in the business for customer to realize the benefit or reap the benefits over a period of time, year after year after year? So something which we create now, it should become an annuity for the customer. How do we ensure that whatever changes or whatever things we are making today are going to benefit the customer and the business for a long time to come? How do you do that?
See, if there is no sustained value delivery, which impacts the core of the business, I don't think that value creation survives. It's like one of those movies which run for a good 4 weeks and then it's gone into oblivion, right? And the memory line is very short. So, you've got to consistently, that's why I said it's the mindset change. It's a culture change within your own organization's ability to shift from A level to a B level organization to be starting to deliver something differently. And then that becomes the new baseline. That new value or that new style of delivery is the base from where you will talk the conversation further. So I think with that, you start making a difference. You start building trust, which thereby gets you a seat on the table. And it starts affecting what you deliver as a product, not just to your organization, but also to your end customer. He starts seeing the difference. We've got a lot of customers whose audits we support, and their auditors come into our world and they support the audits. And once they start seeing the difference, it becomes a way of life.
It becomes more collaborative also. Sure. Perfect. I think one of the things which normally we usually face on a day-to-day basis is teams are doing a good job on one side, which is more of a routine matter. But I think for value delivery to happen over and above the normal routines, you need to spend some extra. That extra could be effort, some extra could be some investment, some extra could be some initiative, some project or something. How do you motivate your teams to ensure that they go beyond their normal to create value for the organization. With routine, I don't think so the value creation becomes so obvious. It is a routine matter. You will continue to do what you are doing. How do you motivate your team to go an extra mile to deliver value that should become realizable by the business? Any thoughts on this?
First thing that we need to make team realize is, what is in it for them,
What is,
right?
sorry?
What is in it for them? So if they're doing the routine activity and we expect them to do value creation, we need to upfront tell them what is in it for them. Continuously reward people if they are coming out with ideas. The third thing is we have to enable them to think that way. For example, if today they want to really help, but they don't know how to do it. So we have to give that platform, training, resources for them to kind of say that, okay, just don't think like this, go beyond this, right? So those three platforms, if we give them and motivate them, right? The best outcomes will come out of them. So if you actually see, any quality professional will tell you this, the best and best of ideas will come actually from the teams, right? So they are the experts, they are doing the activity day in and day out, and they know what it is. If you actually help them with these three things, they will actually start excelling. So that's the best way to motivate them, tell them what is in it for them, and then, they will automatically tell you.
Thank you so much.
I'll just add on that. I think today's workforce is pretty hungry. They are eager. They want to do newer things. They want to start interfacing a lot with technology. They get bored very fast. So, I think while we have that as a challenge when we try to retain people in monotonous jobs, especially that the fact that this workforce is restless is what you tap on to then take them on that one step above journey. You just want those same hungry kind of guys who are wanting to do more. Get them in and they are ready to put the extra hours, more surprisingly than you think. Get them closer to technology, get them closer in the front line. I think they'll surprise you.
I'll just add 2 cents to that. Upskilling and cross-skilling. I think that is what is the value creation for the employee.
Yeah.
So that's how they grow. That's how they move up the hierarchy. It's not just a question of moving up the hierarchy, but how they learn new things, how they are making themselves adaptable to various avenues. So earlier it used to be, okay, if I'm a BCom, a commerce graduate, I have to go only in the accounts line. Today, it's not that. The guys who have gone to, yes, the guys who have done commerce and gone into automation, they've gone into supply chain. So that way, how do you support in the cross-skilling and upskilling? As an organization, I think it's the organization's responsibility to support the employees with this.
Absolutely, I agree. Perfect. I think we have done the similar thing in our organization also by cross-training people and exposing them to different projects, making a cross-functional team to deliver something which was involving more than one areas together. So that's how I think we have engaged people to deliver value. Yeah, I agree with you. Fantastic. So any questions from the audience or any experiences they want to share about the discussion that we had on value creation for the organization? Sure.
Hi, Venkat and Sriram. I think you talked about the value creation and generation. So can you share some thoughts around value shown and value experienced? Because at the end of the day, it is the stakeholders, what they perceive as a value, it's important. So can you share some thoughts around it, value shown and value experienced?
Did you get the question? Value?
I'm
Sorry, your
not-
voice is.
Yeah, I know some of the voice from the audience. So
I can't hear.
can't
So
hear.
what is value shown?
Value shown, because that's what we demonstrate to the business, that this is what eating. But on the opposite side, what value they are experiencing. So some thoughts around how do you balance these out?
I
So
will
I-
try.
Sorry, go ahead.
I'll try and answer that question if I've understood it the right way. See, the value creation, they're basically tangible and intangible. So tangible, clearly you'll see it in terms of numbers. You'll see it in terms of numbers. you will see it in terms of the end results also. When I'm talking about the end result, I'm not talking here about the profit number over there. But let us say if you're able to sustain with a customer, that's a thing. Now we spoke about paid on time. Paid on time does not necessarily mean that it has to be 100% paid on time. But if you're able to use your analytics to see what is to be paid on, if I have to pay on time, obviously I need to have a discount, right? So saving interest by managing my working capital versus paid on time, I need to trade off on that. I need to do some analytics on that. So that is value creation to the organization. That's value creation to the organization. We spoke about closing of the R2R, the closing of the month-end books. So that is value creation to the organization. Then if you are able to do a lot of this upskilling, cross-skilling, and you are able to reduce your attrition, you are able to attract and retain talent and grow the talent, that's a value creation. So you can talk about value creation on the finance front, you can talk of value creation on the supply chain front, value creation on the people front, whatever. So there are different metrics, and there's no one tick in the box saying that, okay, if I do this, it is value created. That could be something different for me, it could be something different for you. It depends upon with what base you start, what appetite you have. But only one thing that I can tell you is that there's no end to value creation.
One thing that I want to add there is, again, if the customer sees that as a value, I think that's what matters the most. Whatever you show actually is secondary. That means initially we have not aligned with the customer in terms of what, we want to derive out of that. So, at least in our earlier years, we've been taught to see at the center, right? So we'll have to kind of deliver to what he or she is expecting or the customers are expecting rather than trying to do things on our own.
I agree with you. Thank you very much. I think that's something which nowadays is a challenge that we as GCCs, that, okay, this much value we are generating, or we have given you the as an organization, financial or non-financial, as Venkat talked about. But what is it that the customers are looking for? Is it matching with that or not? So that's something which is there. But thanks for sharing your perspective.
See, Ajit, there's one more dimension to that, right? So, and I'll give a real example in our collection space, which is again not out customer within the organization. And our collection metrics were all kind of greenish. But we all love to get it there, right? But the stakeholder at the end, or the central team's OCF numbers don't look as exciting as this metric here is. Once you start having a stake in that OCF metric of why the problems are, and then you start collaborating with them, and you start, yes, this is my internal metric, and that's the disconnect you're talking about. My story looks all green, but my green is not good enough for you. So, I think that's the kind of evolution. You've got to understand his point of view, or where are you fitting in his broader scheme, and then try and move the needle there. Then it really makes a difference.
Well said, Sriram. Thank you.
I think one of the values that this panel has created for the entire group here is to get the session more or less back on track, on time.
So we have a quick poll for this session, just to conclude. Here it is up.
I think Atul has a question. Just 1 minute, please.
Hello.
Yeah, Atul.
Hi. Question to all the panelists. You touched upon earlier the technology and GenAI, so just want to understand what technology you're using, because I'm sure for KPI tracking and data analytics, you will have, already, some foundational systems or platforms being used, but for value identification, realization, like, Ajay was asking, right? Are you using some kind of technology, or just elaborate a bit about your respective experiences? Because in my experience, obviously, value stream mapping is, the best way to figure out that from KPIs, how do you reach to the value, right? But then value stream mapping can be, unless a technology is applied, you can't really, get to that, right? So that's a question. Thank you.
I think there are various platforms available to create the value over there. There's no one single good platform. So you can use ClickSense tools, you can use a lot of Microsoft tools that are there, and there are a lot of SAP-based project tools. So you just need to choose what you want and then go with that. I'm not an IT guy per se, but I can tell you that there's several tools that are available. There are cloud-based tools which you can use to which can give you a lot of predictive analysis also. That's important. So it's not just in terms of throwing up the numbers that you've got and what analysis, but a lot of predictive analysis over a period of time. That's what you would be looking for. But there are several tools.
So I think more than the tools, what is the insight that you're going to get out of the tool is very important, right? So what is important for your CFO is important. I think whichever tools, as you mentioned, right, whichever tools gives that along with the insight, I think that's the best one I would go for.
I think Nilesh was very modest, but we are using something in Quintus to demonstrate that, right, on value stream mapping and live tracking of how you can get to that level. But thank you very much.
Good.
So there is a question, what are the key steps for GBS and GCCs to move beyond transactional service delivery and establish themselves as strategic enterprise partners? So we are getting first as a team. Very nice. All right. I think this will continue.
Yeah,
Thanks
just
so much,
carry on.
panel.
Thank you very much, everyone. Please stay for a moment. I'd like to request Mr. Tarun Ahi, VP and Head SSC Jindal Steel, to please come up and give a memento to Sriram Gopalakrishnan. Asking Sachin Jadhav to please come. Sachin Jadhav, VP Transformation Quintus Global, for a memento to Dr. Venkat Kumar. Kaushik Krishnan, Head Transformation Bungie, for a memento to Hemamalini Venkataraman. And Mr. Bharat Sundaram, VP Everest Group, to give a memento to Nilesh Bhatia. For moderating this session. Can I have a quick photograph? Thank you.